and give them to the birds and bees. I want money.
We want money. Quick. 133 693. We want it in US. I want the green folding stuff. Dominic, can you help me out?
Yes, I can.
A mate of mine lived in Hanoi, and he had this little Vietnamese kid run up to him every day, and one day he ran up to him and he said, Mr. Paul, this is urgent. I need $1 million. He said, you need $1 million? Yes, in US. He was about 8, this kid.
What did he need $1 million for?
I don't know.
What a cool thing to ask someone.
I know.
I want $1 million US.
That's right.
Even though the denomination.
How are the markets going overnight?
It's interesting. We're at a very important point. So, mums, perhaps put your Chardonnay. Oh, it's a bit early for a Chardonnay. Put your coffees down. Dads, stop yelling at your kids. Kids, be quiet so mum and dad can listen to this.
Right.
It's very important.
So here we go.
I don't often
this doesn't sound good.
Well, I don't often get serious, but look, I'll give you the overnight market reports. They've bloody fluctuated, to be honest with you, the whole three of them, as dip buyers bought in. So the market was falling, people were buying a little bit of a bargain. The two main concerns for investors are, or for us, is that will the Fed Reserve cut rates? And everyone's waiting for a rate cut in America. Not sure if they will. And are tech stocks overvalued? And if you could imagine this drawing I'm going to do, there's a line that's flat going up a little bit.
Right.
And then there's 3 or 4 lines that are going up at a high rate. So there's a big gap between the profit-making companies and all of these tech stocks that are being bought at ridiculous rates in anticipation of the next Amazon, the next Nvidia, the next Tesla, Apple, all of that. So, you know, some of them will come off and be successful, but there is a fear that things are overvalued.
Right.
So it's a bit like, you know, in a football match, you know, someone makes a move on grand final day. Will it come off? You know, will Lockie Neal come on at what was it, half time, whatever it was?
Yeah, gotcha.
And no one knows the outcome.
Yes.
So we've got to be cautious. So it's okay to be scared about market volatility if you're over 55, but you need to have someone look after. This is the most important time when you need a financial advisor in the last 10 years.
Really?
Anyway, I'll give you the numbers. The Dow fell 0.65% to 47,148, whilst the S&P 500 was just a little bit lower at 6,734, and the Nasdaq actually rose 30 points to 22,901. Across Atlantic, London's FTSE got walloped, actually 1.1% lower to 9,698 points, while the French, German and Italian bourses are also lower. Gold fell 2.6%. to only $4,884 an ounce, whilst West Tex Medic put on $2.18%, 2.18%, I should say, to $59.97 a barrel, which is still pretty good because the cost of crude oil is an important factor in the CPI. And the A dollar is slightly higher against the greenback and is currently buying 65.38 US cents, with the ASX by 17 points lower, pointing to a weaker start on Monday, where our market took a belting on Friday and it dropped 1.36% to 8,635. So it's okay to be scared about the markets. It's normal. Look, we've made 20% per annum for our clients in the last 2 years. It's ridiculous. It shouldn't be that much. So my batting average is above normal, so I'm ready for a duck. But if you've got someone to help you with this is the most important time to have a financial advisor to walk you through it. Some people don't need to panic. Some people can just ride right through it. If you've got a nest egg over here that you can rely on to draw income. Or if you're working and you think, well, I've got another 25 years, I'll just ride through it.
Yeah.
So it depends on your circumstances, but my advice is now is the best time to have someone look after your nest egg.
Paul has called through. Good morning to you.
Yeah, good morning, team. Just wondering, I know it's based around finances. With selling a house, I know you pay capital gains, right? Now,
not on your home that you live in, Paul.
No,
Good.
That's true. Yes.
Good.
Now, on an investment though, why is it that the government with the reserve with the interest rates, when it's actually going up, shouldn't there be a system in place where, and I know it's all revolved about money, they should actually remove or reduce the component of capital gains, and when it is going down, well, then they can adjust it accordingly. Give back to the consumer. Let's be realistic. If we vote them in, they should help us.
Paul, we've got to ring up Paul Keating. He'll tell us to get knotted. But I think capital gains tax is the most insidious tax this country has.
Oh, what about high land tax?
Land tax is probably number 2. But
what about payroll tax?
But he did. True. That's probably number 3. Darren, you've got the first 3.
There's the
capital gains tax is the most insidious tax. But to Paul Keating's defence, and the Labor Party still, well, at this point in time, is still sticking to it, they give you a 50% discount. So they say if you've made a profit, you only have to put on a rental property or something like that, and you've had it for more than 12 months, you only have to put half of it on your income tax return. So with clever planning and the use of some superannuation contributions, etc., and some other legal tricks of the trade, you can usually minimise capital gains tax. So whilst Paul Keating is the one to blame, I have to hold out an olive branch. He said it's not too bad to your situation, Paul, because you only have to put 50% of the profit on your tax return.
Yeah, interesting. All right. The lines are free. If you call now, you get straight through. 133 693. Any financial advice that you need, give Dominic Alafaci a call. That doesn't sound good. The crystal ball you're looking into isn't looking good. Well, how do you think the American share market's going to go? Is that the whole thing is overpriced?
That's the whole issue. If you look at the data, you've got quality companies that are making nice profits, their prices are going up nice and evenly. And those of you who understand the incline or the delta, if you're walking up a modest hill, that's okay. But walking up this hill, well, where we are here, from the bottom of Collins Street up the hill, the incline's probably 5% and it's or 6%, whatever it is. So it's much, much higher. So we've got a whole lot of stocks that have been bought at ridiculous prices, some would say, but they may be right, so we may be panicking unnecessarily.
Sue has called through and she joins us now. Good morning, Sue.
Good morning. I'm an aged pensioner, but I have super. I have quite a bit in super, which I haven't accessed, and I certainly am entitled to. But I'm really concerned. It's gone down a lot. Unfortunately, it's just been conservative, and it's just going down, and I hate seeing it go down.
So, Sue, that must be over a very short time period, the last month you're talking about.
Well, yes, okay, the last month.
But what are let's say you look at the 10 months before that, would you have made very strong returns?
Oh, look, I really don't understand. Well, I guess... Yes,
so let me say this to you. Yes. If you've made $10,000 a month every month for the last 10 months, so you've made $100,000, let's say, and then you lose $20,000 in 1 month, you're still $80,000 ahead. So rather than having a 10% return, you might have an 8 or a 7% return. So you've got to take it into perspective. But if you're concerned, go to collinshouse.com, contact me button, send me a note, and I'll contact you to see if I can help.
Good on you, Sue. To Daryl, good morning.
Hey, g'day, Dominic. How are you, mate?
Good, thanks, Sarah.
I've just got a question. Someone's told me that when you buy an electric car, you don't have the luxury car tax or, any other taxes.
I'm not sure about that. I know there are incentives, and that may be one of them that the government's put in place for electric vehicles. It makes sense, Daryl, but I don't know exactly the combination of the taxes.
We're talking motoring with Paul Gover in the next hour. He may know.
Paul might know. I don't know that. But I think the whole luxury car tax is a joke because it was designed to protect our industry.
Yeah, and we don't have
an
one.
industry,
No,
so the government just sits there
licking
the bone.
Yeah. And I'll tell you what, investing in the property now, I reckon it's hard to get into, hard to get out of. You've got to make the right decision about which property, and with land tax and investing and laws being on the tenant's side rather than the landlord, wouldn't touch it with a 40-foot barge pole.
It is more difficult, Darren.
It is.
Definitely more difficult.
And to Chris, good morning.
Good morning, how are you?
Good, Chris.
Hey, I just got a quick question. I'm about to retire in 2 years. I've got super of approximately 320,000. I own my own house. I'm single. What I want to know is, can I get a full pension? And if I do get a full pension, can I draw from that super to, say, average of $50,000 a year?
Chris, the answer is probably yes. How old are you?
I'm 63.
So when you're 67, you'll be entitled to the age pension based on the assets test and the incomes test. And just quickly, if you've only got $320,000 in assets being your super fund, you'll probably get...
What about his house? He owns his house.
His house is outright. That doesn't
matter.
A single person who's a homeowner can have $321,500 in cars, cash, diamonds, money in the bank, super, etc., and you get the full pension. So you're just on the money there, Chris. You'll get the full pension.
Oh, great. Can I draw?
Yeah, you can do what you like. You can spend it. You can go to Crown Casino, put it on black. Don't do that. Don't do that.
No, don't do that.
No, don't do that. But will I get affected if I draw 20,000 out?
No. It's your money.
Okay, thank you.
It's your money. You can do what you like with it. You can take a lump sum out and go on a nice holiday.
There we go. Good on you, Chris. We have run out of time, Dominic.
All these callers.
I know.
Just tell you what, go to collinshouse.com, click on the Contact Me button, and I'll contact you, perhaps not today because I'm a bit busy, but maybe on Monday.
On Monday, collinshouse.com, and then ask Dominic.
Yeah,
there's
click a little button on the top there, contact me, write a little note, and I'll give you a buzz.
Easy. Thanks, Dominic, for coming by.
My pleasure, Darren.
That web address is collinshouse.com. Dominic Alafaci. We'll see you in a couple of weeks, Dom,
Cheers.
as we approach 10 o'clock.